Joining us from our Hong Kong studio to talk about the Hong Kong property market is Peter Churchouse, Head of Research at Morgan Stanley Hong Kong, and Vincent Look, Property Analyst at James Capel. Thank you both for joining us today. Mr. Churchouse, I'd like to start with you. Since March, Hong Kong's property market, which is a major pillar of the colony's economy, has come off its highs, with prices dropping between about 5 and 10% from their peak. Do you think we'll continue to see prices come down in 1994?
Yes, I think that's right. I think we'll see residential prices, not commercial office prices, but residential prices come down in total around 20, maybe even as much as 25%. Probably in the period now until the end of June, when government introduces its proposals for curbing property prices in the residential sector. That will mean prices are back where they were about December of last year, because they were up 20% in the first quarter of this year already.
So what's your outlook then for commercial property?
I think on the commercial property side, I think rents will continue to soar. I think we've got another 20, maybe even 30% upside on the rentals in the commercial office market, but I think prices will slow down. We saw 40% increase in commercial property prices in the first quarter. I think that will slow down, particularly as we see interest rates starting to rise. So I do not expect to see so much upside in prices, but I think rents will continue to move northwards, yes.
Mr. Look, let's talk a little bit more about rising interest rates. We are in an environment of rising interest rates right now. With the Hong Kong dollar pegged to the US dollar, it's especially sensitive for the colony. How do you expect rising interest rates to affect the property sector in Hong Kong?
On the commercial side, I would say that there is definitely going to be a rebounding in yields from the 5.5% low for the course of over 1993 up back to perhaps 6 over 1994 and 7 into 1995, because on the rental side we continue to forecast rentals rising up until the end of around 1996, and on the capital value side they will not enjoy such a good run, simply for the fact that given the rebounding interest rates, there is definitely going to be some impact on the capital value number of capital value transactions, who are in Hong Kong particularly subject to more speculative activity.
So when you talk about, I'm sorry, when you talk about capital value, you're talking about the prices of property.
That's right,
bought
yes.
and sold. So you're expecting to see that be most affected by rising interest rates?
Yes, definitely. Basically because they tend to be more driven by speculative activity, as Hong Kong is particularly endemic with strata title purchases and strata title transactions, whereas on the rental side they are more fundamentally supported by genuine end-user demand, obviously in terms of office tenants.
Mr. Look, speculators have been cited as a major factor for supporting this property market in Hong Kong. The government has said that it will not introduce a capital gains tax to try to cool speculation. How much do the speculators actually affect the property market in Hong Kong?
On the point of the capital gains tax, as Peter pointed out, it's definitely a good point that the government will not put this factor through, because really it's not a problem to address the root cause. It's more a kind of ends to a means, as it were. And in tackling the problem of speculators, we would say that they have already taken a kind of a pause and a wait-and-see attitude in light of the government taking an aggressively strong stance towards tackling the residential house price problem that's been rising significantly over around 40% for the first quarter of this year. And in looking at the Laguna City pre-sales, Henderson Land Ma On Shan site sales, we've definitely seen a cooling off in terms of speculative activity. For example, with the Laguna City, we would attribute most of the 5.5 times oversubscription rate to genuine end users demand, as it is only logical to assume that speculators under this current climate would perceive property at this moment as a hot potato.
Mr. Churchouse, would you agree that in fact speculators are coming out of the market, and can you give us a sense of how much speculators account for in the Hong Kong property market?
Yes, that's a good question. Put it this way, in a normal market over recent years, the average numbers of transactions taking place in the Hong Kong property market, that is sales and purchase transactions, has been running at 5,000 to 7,000 transactions per month. As interest rates have declined and the speculators have come into the market, we've seen transactions volumes running every month at something between 12 and 18,000. So we're seeing more than double the amount of transactions. Now that is a clear indication of speculative activity in terms of the volumes of transactions. However, having said that, I do believe, and from the surveys that we've done, it suggests that very few of the units that have been bought by speculators are in fact being kept vacant for speculative purposes. Most of the units that were sold in the beginning of last year who received occupation permit have been actually occupied. There are only one or two developments where flats are being kept vacant in any numbers at all. So I think the units are being used one way or another, even by end users or by tenants. So I don't think there is a great case to say that speculators are holding flats back from the market at this point.
Would you say, though, that if the government, when it announces its property cooling measures in June, does decide to take fairly harsh measures that would be aimed at speculators, do you think then that we'll see a marked depreciation of prices?
Well, yes. I hope government, in its wisdom, quite frankly, tackles the problem at the root cause. The reason for rapidly rising prices is purely and simply very strong demand with very modest supply prospects. The supply in Hong Kong is controlled almost entirely by the government. The government here is a monopoly supplier of land and has really only supplied very small amounts of land to the market over the years. So any speculative activity is being done in the context that there is very little supply and a very strong demand. The moment speculators see that there may well be more supply and therefore prices are not expected to rise so rapidly, the speculators will exit the market very quickly. So I'm hoping that government really recognizes the basic economic fundamentals of the problem and does not try to affect the demand side of the equation, but really tries to impact on the supply side. And the evidence coming through from government right now is that it will take that line. We're saying that they're seeing that they're not going to go for a capital gains tax, and I think that's a positive sign here. So I'm expecting that prices will come down, speculators will be driven out of the market, and I think we will see prices depressed by 20–25% for some period of time here. But I do not expect to see a long-term 3 to 4 year bear market where prices may drop by, say, 50 or 60%, as they did in the period 1981 to 1985.
And when you say 20 to 25% decline is what you're expecting, that is in the residential side?
That's absolutely correct. I do not expect to see that sort of decline in the commercial market just yet. I think what will drive that is 2 to 3 years from now, there is going to be quite a substantial amount of commercial property in the construction phase. And I think that will be the time at which we will see a correction in the commercial office market of significant proportions, and particularly if we see sustained rises in interest rates up through into the mid-teens from where they are at the present moment.
Mr. Look, picking up on the notion of the demand side of the equation in Hong Kong's property market, clearly the financial services industry is one pillar in Hong Kong. If Hong Kong's stock market does not takes a turn for the worse from here on out, do you think that investment bankers and others in the financial services industry will be less willing to pay the high rents that we've seen in Hong Kong?
We are definitely of the opinion that this time round, with the strong influx of foreign demand from financial and banking houses, as led by the US side, are here for definitely on a, say, 5-year outlook rather than on the immediate 1-year term. They have come in quite aggressively, and in taking up this attitude to taking up Hong Kong rents.
Okay, we're going to take a break there. When we come back, we'll talk about the movement we've seen away from Hong Kong, and we'll also look at the personal finance view of how to play Hong Kong's property market. Please stay with us.